Joining me now to unpack Liberty Holdings results is Thabo Dloti, the Chief Executive of the firm. Good to have you today, sir. I guess a happy anniversary is in order as well, as I mentioned to Guy Hayward of Massmart, because you'll also be celebrating your first year in office in the hot seat.
Thank you.
Exactly. So maybe just to get your reflections then on the year so far and the progress that's been made. It has been a fairly rough terrain that you've had to maneuver.
Yeah, look, it has been a very difficult market environment to have operated. We know that the consumer is taking a beating. So yes, to produce the results that we have given that environment, we are very proud of ourselves. But having said that, that's what you do if you build a long-term business. You try to build it over time.
Exactly. Your long-term insurance, however, saw very positive earnings from that front. What do you attribute that to?
Yeah, I think previous investments, making sure that we've got a solid distribution on the ground and continue to grow that. It's expensive, but you grow it because you know that it's going to do what we are doing, where you're going to get the flows in a very difficult environment. So that has helped. Continuing to be innovative around a product that is beginning to pay the dividends that we expect. And most importantly, continue to have a solid brand that people can recognize. And that's really something we're proudly building. And we've built a lot of that in the last year. Wow, I'm sure you've seen how much Liberty is present.
Exactly.
Yeah.
I want us to touch on that innovation and this customer-centric innovation regarding products that you allude to in your numbers as well. What does this entail? Because the market's very difficult at the moment.
Look, I think we all are aware that we have to have a different relationship with our customers. We are aware of the fact that gone are the days where we sell a product to a customer. It's a relationship with a customer that we need to have. Gone are the days where we think that what we sell is we are the only ones selling it. We are not competing only with our traditional insurers. We are competing with other people that are coming through different ways. So yes, that customer intimacy, making sure we are relevant in their lives, is far more important for us. So there is a huge investment in making sure that our offerings, not only today, meet the client's needs today, but they can continue meeting the client needs going forward. That takes a lot of understanding the client. That takes a lot of investment in adapting with the client. And we believe that the investment we've made in our distribution and adapting it, and our product line and adapting it, is going to get us there.
What does this mean for your endeavors to conquer the rest of the continent? Many analysts have come forward saying that your competitors, Sanlam and Old Mutual, have been more aggressive with regard to that.
Look, I think we are late entrants. First of all, I think our competitors, especially the ones that you have mentioned, have been there for many years. We are the late entrant. We've entered that market in the last 5 or 6 years. And I think we've done a good job for where we are, but we are still very much at the building phase. The way we see it is that our success in the next while is making sure we've got presence. Because once we've got presence, we can talk about growing into those markets. So our challenge is really gaining that presence. We have achieved the presence in East Africa. We've achieved presence in the SADC region in the main. Now we have to crack the West Africa, and that's really where our focus is, to make sure that we have presence there. Then we can build those businesses to scale.
That presence, you're going to go independently or partner up with the local players there?
Well, I think in many ways, you can't enter an unfamiliar market and try to do everything. So we absolutely are looking into partnering with suitable partners on the ground. But most importantly, we are partnering with Standard Bank, and the Standard Bank has got local relationship in some of these markets where we go into. So it makes our job a lot easier to actually work on the footprint that they've created and create partnerships that are lightly associated with them. So where we are able to do that, it gets us going very quickly. But it's not always easy because there are markets where we can't actually work together from regulatory reasons.
Let's touch on your former home, which has to be Stanlib. The asset management environment, also a tricky one to navigate there. And I guess lessons learned from the African bank exposure. Yeah,
I think it is a big lesson for the whole industry. It's a big lesson for money market managers, and Stanlib is the largest in the country. So clearly they've borne the full brunt of what has come and gone out of the able situation. But having said that, the strategy of the business has always been to diversify its earning stream, diversify its clients, diversify its product line. And the reason their earnings are up is because they have achieved that diversification, which is something commendable given the environment they've operated in.
Liberty Health, though, is another sore spot where, again, it's a difficult environment. Everybody's fighting to get the attention of the client. What needs to change there? Well,
I think we have been changing things that we believe need to be changed. I think the first thing is that we needed to consolidate our operations in South Africa to make sure we were a scalable business. Last year, we took great pain in doing that. But I think the big story is we must grow the members in the rest of the continent, and that's exactly what we are doing. And we've seen growth steadily happening in all the geographies where we are operating. We've seen claims ratios come down to acceptable levels. And that's important for us because it means that a newer business that we've created that's operating in close to 16 countries, I say close to because in some cases we're operating through partners, is beginning to flourish and is beginning to add new members. Clearly, the challenge of the South African market, which is much more established, much more competitive, and that obviously is going to continue being a challenge. But really growing Africa is much more important for us.
How wary are you of that, especially given what we've seen in the dip in the oil price? Everybody's nervous about what that means for economies like Nigeria that you want to go into. Does it make you think twice?
No, it doesn't make us think twice. It does, though, change our focus in terms of how quickly and how fast those economies are going to grow. Clearly, what happens when the oil price comes down, everybody's readjust their own assumptions about growth that you can achieve from countries that are dependent on oil. But we believe that the changes that have happened inside those countries are far more reaching. We've seen demographic changes on the back of reforms that have been instituted, both political and economic reforms. Those things are not about to go away. But clearly the growth will not be as easy as it was before, because the government, for example, Nigeria cannot fund itself now out of, their revenues are going to drop. But it doesn't stop the development of the other sectors that are happening. We've got a massive industrial sector that's been developed to serve the emerging consuming market that has been a growing direct economy. So that might slow down, but we don't think it's going to go away.
Exactly. Let's just to close off with investor confidence. How are you hoping to shake this up and mold it? I'm sure you're going to go on your investor run around Cape Town in the next coming days. Your share price has gone up by at least 15% year to date. Your words of encouragement to shareholders and what they can hold you accountable to in the next year.
Yeah, I think our strategy has been clear for the last while to say that we've got a strong retail business. We'll continue on that because we believe it actually helps us ride the economic cycles in the context of South Africa, but we have to grow into other markets where there's a faster growth. That is happening in a corporate market in South Africa because we believe that the reforms are going to be attractive for that market. We've invested heavily in making sure that that happens, and we begin to see it in the results. Corporate has grown. It's become the darling of our results. But we have to do the same thing in the rest of Africa. We have to continue investing in those opportunities that we've identified, building them to scale, because when those markets pick up, again, they're going to contribute accordingly into our results. So that's really the story that we take to our investors.
A promise of growth, no doubt.
Thank you.
Thabo, thank you so much for your time today. Such a pleasure speaking to you.
Thank you for having me.